So sticking to the $75 billion, it's an important signal to the market. It's a commitment made during this IPO. How significant is that commitment, Matt? Good morning.
Good morning. Yeah, as you mentioned, this is obviously the $75 billion in dividends that Aramco had pledged to pay late last year when, oil prices were obviously a lot higher and nobody would have foreseen the situation that we're sitting in now when Aramco has had to take big production cuts, prices have fallen. And yet, Aramco is still committing to paying this dividend, giving the government this vital cash lifeline. I think Aramco likes to sort of, say this is a sign of their resilience in the face of low oil prices, that they're able to do this while prices are so low, whilst other oil majors are cutting dividends. The flip side of this, of course, is that Aramco is going to be borrowing and will be continuing to borrow, I would expect to see, over the course of this year to be able to pay for that dividend.
Matt, I'm looking at some of the numbers on the announcement here, and 2020 CapEx is seen at the lower end of $25 billion to the $30 billion range. What else did they say in terms of the outlook for capital expenditures?
Yeah, I mean, part of what we've seen Aramco doing as they're trying to protect and conserve cash to be able to pay for this ginormous dividend is they're obviously having to take some cash out of other parts of business as well. So at the beginning of the year, the guidance was that CapEx could be as high as perhaps up to $40 billion. That was cut earlier on in the year to a range of 25 to 30. Now they're saying that they're probably going to come in at the lower end of that. Also, I think what's going to be interesting to watch is with SABIC now acquired and part of the Aramco group, whether there is the opportunity to save money through stripping some capex out of SABIC's business as well, and also what we'll have to look out for over the rest of the year, in addition to more borrowing, is going to be how do they start accounting for SABIC, which is worth significantly less today than the price that Aramco agreed to pay for it about a year ago. The SABIC share price has tumbled significantly, so are we going to have to see Aramco take a big impairment on that investment, which has declined in value significantly?
Well, we saw SABIC already take some impairment charges themselves for a variety of businesses. The one heartening point here, Matt, and I do always look for the spirited guidance as you go towards the bottom of your stories. Aramco is yet to draw on its $10 billion of revolving credit. Is that a light under the bushel of the profit collapse?
Look, I think if you're looking for the light at the end of the tunnel, then on the call that the CEO, Nasser, did yesterday with some reporters, he was fairly optimistic about demand starting to improve over the second half of the year for crude oil. I think the company is starting to get a bit optimistic as we see economies start to emerge from the lockdowns and get back to some sort of normality. That, of course, comes with the caveat that how the second wave effects of the coronavirus go out. As you mentioned, Aramco does still have undrawn facilities on the balance sheet. The $10 billion revolver is something which Aramco's had for a long time and has sat there as a kind of an insurance policy for difficult situations where it might need money quickly. We might see Aramco drawing down on that. We might see Aramco issuing more bonds or new loans as well, as it helps to raise cash to shore up the balance sheet while it waits for this expected recovery in oil prices, which it's hoping for.